Dear students, good evening again. Today we are going to discuss the inventory measurement, and in the inventory measurement the main two concepts, the concept of the periodic system and the perpetual system, that will be discussed. First of all, we have to understand what is the meaning of the inventory. Inventory basically any material that is purchased for the resale purpose, or any material that is purchased that will be used in the production or in the providing the services to the customer. So that will be considered as the inventory. For inventory, what we need the closing stock. The closing stock means at the end of the month or at the end of the year or at the end of the financial period, how much the stock is available. Obviously we have to know that how many units are there, and also what is the value of that closing stock, because that value is written in the income statement when calculating the cost of goods sold, and this value is also written in the statement of financial position as the current asset, the inventory stock. So that's why we need the value of the closing stock. So now value of the closing stock can be measured by two methods. It can be used by the periodic system, also called as the physical system, or it can be measured through the perpetual system, or which is called as the continuous system. Now, what is the difference between these two, and which companies or which type of the businesses use the periodic system, which type of the businesses use the perpetual system? We will discuss these things in detail. First of all, periodic system, let's say some companies they are purchasing like 2,000 bags of some product. So during this month they have purchased these 2,000 bags. At the end of the month they have seen that it is like 200 bags are still available. So this is what, this is their closing stock. So this is what, this is purchases. For example, the value is 200 per bag. So it means 200 multiplied by 200. So it will be $40,000. So this is what, this is the value of closing stock. Means during the complete month or during the complete period, they have purchased the bags, the total bags, the number of units which they have purchased is 2,000. But at the end of the month or at the end of the period, they have physically counted that how many bags are left with them, what is the balance. So they counted there are how many bags? 200 bags, and one bag is, for example, for $200. So it means the total value of the closing stock is what it is, 40,000. But there is a one small problem in this system. There is a possibility of some error. There is some possibility of fraud, some stealing, some embezzlement. So we are considering that if there is a 2,000 bags available during the month, the total purchases are there, and 200 are still with them, it means the total sale is 1,800 bags. But there is a possibility that there is an error while recording the purchases. There is some error while counting, there may be some error. So there is a chance of any error, and also for some frauds, means goods are sold but they haven't received the money. Sometimes they have just stolen the goods, they have stolen some of the bags but it is not recorded. So this is the main issue with the periodic or the physical system. But this system is used by whom? When there is a large volume. Large volume means what? When the customers are more but the cost is less, or what we say the value is less. Means the company is selling so many units every day. There may be hundreds or the thousands of the customers are there, but the items which they are selling, the value per unit is very small. It may be, for example, a small bookshop is there and they are selling different type of the board markers. They may be selling some registers, they may be selling some different stationery items. So it is not possible for them to record every transaction, that how many units are available, how many markers are available, how many units they purchase. So every transaction, it is not one person may be purchasing 1 unit, other maybe 2 units. So for them it is not easy because large volume is there and the value is very less. So that's why what they do at the end of the month or at the end of the financial period, what they calculate is simply see that how much is the closing balance physically, and then they multiply with the value and see the closing stock value, or they calculate closing stock value. But there's a chance of errors and the frauds. So that's why we have other method that is called as the perpetual inventory system. Perpetual inventory system means every purchase and every sale is recorded. Means whenever there is a purchase, it should be recorded. Even 1 unit is purchased, they have to record. Even 1 unit is sold, it should be recorded. So that's why perpetual inventory system is used. But when it is used, when the volume is less and the value is high. We just take 2 examples. For example, one person is selling the vegetables, small store of the vegetable is there, and the other person is selling the cars in a showroom. So who will be using the perpetual system? Because in all day they may be selling 1 or 2 cars, so they will be using the perpetual system because the value of the car is high and also the volume is less. They may be selling 1 car per day or 2 cars per day. Even they are purchasing 1 or 2 cars per day. So it is not difficult for them to record every purchase and every sale. But the person who is selling like a vegetable or small grocery store or some any bookstore or stationery shop or flower shop, so for them it is not easy to record every small transaction. Even a single marker, even a 1 kg of vegetable or 200 gram of vegetable, so it is not possible for them because so many customers are there, and then the value of the item is very small and cannot be segregated into the small parts. So that's why they're considering that whatsoever is left with them, other items is simply sold. Obviously there is an error and the fraud chances, but it is not easy for them to record all the transactions in a chronological order. But when there's a big store is there, like a jewelry store is there or any other store is there where they have some branded shop is there for the shoes or for the dresses, so they have a perpetual inventory system. They record every purchase, every sale, and after every purchase and sale they know that what is the balance, and at the end of the day or at the end of the month or at the end of the financial period, they also compare that what is the stock physically available and what is the stock as per the inventory card or as per the record, and there should be no discrepancies. Now in the perpetual system they are using the inventory card. They have mainly 3 sections. The receipt section is there, then the issue section is there, and the balance section is there. Obviously date is there, that for every date then the transactions are recorded. In the perpetual system we have 2 main methods that are allowed by the International Accounting Standard Board. So those are the first in first out method and the weighted average method. In the next lectures we will discuss those methods in detail also, how it is calculated by the first in first out, but here we are just giving the brief overview of that. In the first section they are writing the number of units, the cost per unit, and the total cost. So how many units are purchased, what is the cost for 1 unit, and the total cost for those. For example, they are purchasing or they are receiving like 100 units and the $2 is the cost, it means it is $200. Again, when they are issuing, for example, they are issuing 50 units, the cost is 2, so it will be 100. So they have the same units, cost per unit, and the total cost. And then the balance, they have 100 units with them, 50 units are sold, it means the balance is again 50 units, so 2 multiplied by 100. So this is the value of the closing stock. Here we have calculated the value of closing stock by considering the closing stock physically and then multiplying with the value. Here with every purchase, every sale, automatically we have to write it, and number of units are there, 50 units are there, and this is the inventory record, the card record, or whatsoever is in the books. They also compare that there should be 50 units of the cars or the 50 units of some specific product should be available. So they will compare the physical record with the records in the books, and then if there is any discrepancy, if there is any issue, it should be sorted out. So these are the main 2 types of the inventory measurement systems, the perpetual system and the periodic system. Depending on the type of the business, they are choosing that one. But nowadays, due to the high use of the computer systems and the scanners, even small stores are using the perpetual systems by the use of the barcode scanners, or every item, even you are buying a small item like a marker or the small register, or even a small like a water bottle, so it is scanned. So most of the companies are working with the perpetual system, but for the small businesses with the low capital or with the resources are less, still they are using the periodic system. Both have obviously advantages and the limitations, but both are working simultaneously. So this is the overall concept of the inventory measurement system under the International Accounting Standard. So I hope you have understood the concept, but still if you have any doubt, any question, you can ask me in the comments section. Thank you very much.